Alrighty, what is good, YouTube? This is your boy. I don't know if I'm... Okay, what's good to YouTube? This is your boy, Justin Smokes. We're about to run through a couple of charts that I like, and I will be covering my rationale as to why I like them. First up, Molina Healthcare. We're going to keep it simple on this channel. As you can see, healthcare has been beat down. Let me fucking get some drawing. Healthcare absolutely destroyed and beat down. You see that right there, right? As you can see, this is called a bottom, a basing period. Let's go to the weekly. Yeah, right here. As you can see right here, we failed to go lower. Now we're starting to build on some decent volume. You see how all of this volume here is way lower. Now you see out here it's getting back green with a lot more volume than on this side. That is what we call a reversal. We have a couple touches of this support and resistance line. Yeah, keep it simple. On the daytime, as you can see, we did fail to break right there. So what you're going to want to wait to see to get in is, let's do arrows. Okay, either we fail to go higher, bounce off of this demand, something like that, like that, like that. Then at some point we should do this again, and then break over here and start for a retest. Or there are positive scenarios. We can just shoot up over this weekly resistance level, break and retest it, take it up higher. So that's what I'm looking for on Molina Healthcare. I'm already in some calls. I am not quite the fundamental analysis guy, but we can look into it. Let's look at their financials. They're growing revenue. Okay, yeah. As you can see, they grow revenue. Go to their cash flow. Alright, so they're making money. So to see if a company's making money, it's not as obvious as to see if a company's money. I didn't know this. You just look at the net income. This is everything that's left over after they pay for everything, pay everybody. This is profit. Net income equals profit. Let's see what this says. Net income is a company's accounting profits after subtracting all costs and expenses from the revenue. It is also called earnings, profits, or the bottom line. There it goes. So we look at the ratios. What I look for, I learned this in a Swing Trading for Dummies book. Let's see it. We want the current ratio to be over 1.5, because what that means is that they'll be able to cover their short-term debt without acquiring any more debt. We want to look at the debt to equity ratio. Usually you want it to be lower than 0.7. As you can see, we're a little bit over 7, but you know, right now we're in an environment where they're cutting interest rates, so we're going to see if that can help fix the we're coming into an environment where we're cutting interest rates, so we're going to see if that can help with the debt to equity ratio problem. I do want to warn though, one thing that I do not like about Molina Healthcare is that, as you can see here, one of their highest trading volume days down here to the right. So as you can see here, one of their highest trading volume days is only 2 million shares. That's not the best. It's a very, I wouldn't say illiquid stock because it moves, but it's a lot of wonky movement. This is a riskier one. Yeah, it's right there. Riskier, low key. Okay. We're gonna go to the next one. Damn, low key, these are all risky plays, but it is what it is. You gotta risk it for the biscuit. Part of the part of the thesis with all of these is that we're getting into a lower interest rate environment. So as the Fed cuts interest rates, there might be some short-term uncertainties, of course. That's why you look at these charts and you don't just jump in. But as the debt gets cheaper, so the money gets cheaper, we should see these companies profit well, especially this one, Circle. So this is a stable coin, Ethereum-ish, but they're not really connected at all. It's not like a BNMR Ethereum play. It's more of a pure play because they're a stable coin issuer. So this is how I look at this. And a lot of people, as you see, I have the 0.5 fib drawn out because if this is the whole move from if this right here is the whole move, as you begin to read, you will learn stocks usually retrace at least 50% of the move, or it retraces from a third to 2/3 because of its Fibonacci. I'm not even trying to use cute words with you guys. Look, you drag this up here, it'll show you a third of the move, half of the move, and then 2/3 of the move. So for anybody who tells you these things don't work, as you can see right here, this already happened in real time. We bounced off of the 0.786 Fibonacci level. And I don't even like to say things like Fibonacci because I don't like to complicate and overcomplicate things for you. All this is really showing is third, half, third. I got long here because we had something I like to call confluences. That is, we bounced off of this demand and that level. So literally, literally somewhere right around here, we got long, we bought some calls. Excuse me, we bought calls. They say 3 confluences are best, right? So what do we have here? Why would I buy calls there? What made me confident, right? We are bouncing off of a demand. We have this trend line here. So trend lines are usually confirmed on the third one. So that would mean that we would go something like boom. And then on this third one, we dump to confirm the downtrend. But in an environment where they're cutting interest rates and this is a stable coin issuer, as soon as we break this trend line, maybe this is what we consider healthy consolidation. As you can see here, right, we retraced 2/3 of the move. There's a demand zone, and we broke this. We broke this downtrend right here. I'm gonna highlight it for y'all. We broke this downtrend. Boom. When we get down here, right? I know it's hard to believe, but I had this line drawn out. I think when we got to this candle, because we bounced off of the 0.5 previously already. That's what kind of gave me confluence that this was a healthy pullback from the beginning. So we go, right, boom, we come back to the 0.5, we try to go higher, and then we reject, right? So now we know that it's showing confluence to the Fibonacci's that we have drawn. So you would imagine when it gets down here, it's going to bounce again. And it does. It's not picture perfect because this is a weekly chart. So after a couple days when we were down here, in that area, in that wick, if you're not a trader who's seen this before, it's easy to get scared, and that's how you get shaken out of your long, because you think, oh, we're just going to keep going down. We're just going to keep going down. But at the end of this week on Friday, when we bounced off of this level, right? Let me give y'all the full picture, right? Okay. Let me go to daily, right? We bounced off of this level on this Friday, right? Now I start to sit up in my sheet. I'm like, okay, we're bouncing off of that level. Let me go back to the weekly. Oh, and now we're about to close over the point 0.7 Fibonacci, right? Now, so me, I'm a little bit more of an aggressive trader depending on the situation. So since I keep bringing up that interest rate cut, the moment that I see that close, I sit up in my and I'm like, maybe with some longs. As you can see, you can get burnt trying to jump so quickly because on Monday we come right back down, but we do not break this demand, and that is the confirmation to go long. So what I did is at the end of the last week that I showed, I initiated 2027 calls, and then on the Monday the next week, which was, I guess this wick was the confirmation for me, but the super confirmation was closing like all the way above this. I initiated a couple weekly swings, and as you could see, that fared out pretty well for me, and I'm still in my 2027 long. So that might have been confusing because this is my first time trying to explain this, and hopefully I'm gonna get a lot better. But just keep running it back if you have to. I'm gonna sum it up one last time. I'm looking at the weekly, right? Because the stock just came out. This is all the information that I have, so there's no point of looking at it all scattered out in the daily, right? Looking at the weekly, we got this big move up, drew our Fibonacci, came down to the 50. Now we understand that it's showing confluence around Fibonacci levels. We failed to go higher. We close cleanly through the 50, through the 0.5. We break below 50%. So we put on risk at the 0.7 line because we close over it, we bounce off of a demand, there's volume coming in, there's a chance we could break this downtrend and go up, and that's exactly what we're doing. Now, we aren't totally out of the water. As you can see, there's this right here. Drawing two trend lines like this is not uncommon. It's something called a fan line, I think, because of the different angles, but all of my drawings are always snapped to the high, low, open, and closing of the candles, so they're not just randomly drawn. So as you can see, these are the 2 points, and then it extends out into the future. Same thing with this line. These are the 2 points that I use, and then it extends out into the future. So we could reject off of that line, but at this point we're so far in the money that if we do reject off of that line, we can either take some off the table or just wait to see. You see, the awesome part about all this is, as you can see that, right? Now you just take a Fibonacci, and you could wait to see if it breaks half of this move, you know, if it does something like this, up into the 50 right here, and then goes higher. It's not guaranteed. The Fibonacci is not guaranteed to work, but what it does do is it gives you smarter areas to put on risk rather than just putting the risk on all willy-nilly. Alright, and now the last one. So this is still risky. Still risky. Yeah, none of these plays are for the weak-hearted. I don't know why I tried to make this my first video. So that's still risky. You sneeze, baby? Bless you. Alrighty, now let's look at course error. Alright, so we had earnings, which caused a huge spike. So like when I'm seeing this candle, I'm already like heartbroken. This one right here. This is heartbreak right here. This is heartbreak right here. This is real heartbreak because as you can see from this line, I'm already watching this. I'm watching this. This is cooking right now. It was cooking not right now. It was just cooking, and I was watching it, and I was prepared. Look, but this move had fucked me up. As it get like that, because look, we did good earnings. And what did I tell y'all about the trend? Okay, we retraced back. Okay, but this right here is where you start to get concerned. It's like, why can't we go any higher? It is on lower volume, but this is where you perk up, right? I already told you guys about the whole 50% retracement, right? So you take this month's entire move and you notice that on lower volume than this huge move, we start to test right around that 50. We retrace about halfway and wick through it. Now the month isn't over, so let me bring you guys back to the confluences. We're doing a bull flag. What exactly is a bull flag? We rise on high on super good volume, right? We start to come down with decreasing volume. I don't know if you guys see what I'm pointing. On this up candle, we have huge volume, huge green candle. Yo, strong shit is so bad. And then on the way down, what the fuck? And then on the way down, oh, this is the snap syndrome. Oh my god. What about the, yeah. Oh my god, it's fucked. Whoa. Oh, path, fuck. Oh, this is insane. Alright, I'm gonna have to turn this off. Yeah. Okay. So, okay. Alright, we're back. Look this. See candle all the way up here, right? We have this big ass green candle on earnings, right? Okay, awesome. Then we have this sharp decline in volume, you see? And we trickle right down. That confirms a bear flag. This right here, and then this right here with the volume to accompany it. If this volume was all weird and these candles were like even weirder and more unorderly, I would be a lot less interested in that because it's just more complicated. So, as you can see right here, we're wicking. Oh my god, on the weekday I never even noticed that. We literally don't close below that 50. So, I bought equity because I do not believe that COUR is profitable yet. Quarterly income. Yeah, and the revenues are just, they're making money, but just less of it, quarter over quarter. Well, yeah. And then, yeah, then they're losing. Yeah, I don't like that. Balance sheet, assets, let's go look at the ratios. They do the math for us, quick and easy. Current ratio, they could cover their debts. No debt to equity ratio. So over here. Okay. Current ratio is 255. We like to see that. Debt to equity ratio. This means that they carry no debt. That's actually very interesting. It's actually very, very interesting. Okay, very minimal debt. That's good. And then it's interesting to get cheaper. That's better. Return on, let's see return on equity, a profitability metric that shows how efficient a company is at using its equity to generate profits. Yeah, that's not good. They should be generating your profit. That is why this is the riskiest one for you to do. I'm gonna go to the daily. And yeah, that's it. I'm not gonna get too much into the trade, as you can see right here. I don't even know if I said how to trade them. Oh, I did for, okay. Wow, if you are still watching this video, please pardon me. Okay, how are we going to play circle? Go to the daily. You are going to wait either for, we either go up with some like low volume, blah blah blah, right? And then we dump towards this demand, right? If we are coming towards this demand, right? It might take longer than that, right? If we're coming towards this demand and the volume is getting lower and red, right? At this demand, you go long again. Simple. That's kind of like if the whole market takes a breather type of deal. And if not, and if we skyrocket, go up, you're gonna break this, and then you're gonna go up again, right? Now, me personally, with this fib being right here, I would only be interested in longs again after it comes down. Because what could happen is we could get to this 0.5 and we could dump back down and just, honestly, anything is possible. This company is very new, you know. So that is the trade on that. COUR is very tricky as well. And for COUR, we could either dump down, come back up a little bit, and then off this, break out of this downward. It's gonna hurt, it's gonna hurt. Jump off this daily demand and weekly level. Right? Or this flag could play out as it should. We'll break out to the upside, most likely pull back to this daily supply, or something like this, maybe something like this, and then take off. And the target would be 1270s because this looks like a pretty good supply right here. Pretty good daily supply. So honestly, if you're not in long yet, I wouldn't be interested in going long on this breakout. I would wait for some kind of pullback, redo my technical analysis, and everything. So those are the 3 stocks that I am looking at. That is probably the most complicated video you've ever seen and the most complicated one I've ever made. I'm gonna fucking release it anyways because I want to, and then I'm gonna just get better and build from there. And I'm gonna keep you guys updated. I'm gonna let you guys know exactly what I do with these stocks. Peace.